Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights that you can use to propel your career or venture forward. I'm your host, Louis Riskwiser, and today we're going to tackle a topic that's on everyone's mind: inflation explained. In straightforward terms, inflation refers to the rate at which prices for goods and services are rising. It's a fundamental concept in economics that affects us all, from the cost of our daily coffee to the value of our investments. Understanding inflation is crucial because it influences business decisions, consumer behavior, and government policies. Briefly touching on its historical background, the concept of inflation has been around for centuries, with early economists like Adam Smith discussing the effects of price increases on economies. The core principles of inflation can be broken down into two main types: demand pull and cost push inflation. Demand pull inflation occurs when aggregate demand exceeds the available supply of goods and services, driving up prices. On the other hand, cost push inflation happens when there's an increase in production costs, such as higher wages or raw materials, which leads to higher prices. Influential thinkers like Milton Friedman have contributed significantly to our understanding of inflation, emphasizing the role of monetary policy in controlling inflation rates. Our understanding and use of inflation have evolved over time, with various schools of thought emerging. The Keynesian school, for instance, emphasizes the importance of government intervention in stabilizing the economy during periods of inflation. In contrast, the monetarist school advocates for a more hands-off approach, relying on monetary policy to control inflation. As my colleagues on Wall Street often say, inflation is like a silent partner in business. It's always there, influencing your decisions even when you're not looking. The 1970s oil embargo is a classic case of cost-push inflation, where the sudden increase in oil prices led to higher production costs and subsequently higher prices for goods and services. More recently, the COVID-19 pandemic has caused disruptions in global supply chains, leading to demand-pull inflation in certain industries like technology and healthcare. The country's inflation rate peaked at over 1,000,000% in 2018, rendering the local currency almost worthless. This extreme case of inflation highlights the importance of sound monetary policy and fiscal discipline in maintaining economic stability. If you're planning to start a business, considering the current inflation rate can help you forecast future costs and adjust your pricing strategy accordingly. Recognizing the signs of inflation can also prompt investors to diversify their portfolios or consider investments that historically perform well during periods of inflation, such as real estate or precious metals. For instance, during periods of high inflation, companies like Coca-Cola and Procter & Gamble have successfully implemented price increases without significantly affecting demand. This strategy, known as price elasticity, can help businesses maintain profitability in the face of rising costs. Additionally, understanding inflation can inform your decision-making when it comes to borrowing and lending. With interest rates often tied to inflation expectations, businesses and individuals can make more informed decisions about taking on debt or investing in assets that offer returns above the inflation rate. By grasping its principles and applying them practically, you can better position yourself for success in the ever-changing landscape of business. To stay ahead of the curve, it's essential to stay informed about economic trends and inflation forecasts. This will help you anticipate potential price changes and adjust your strategies accordingly. Consider the impact of inflation on your industry specifically, and factor in the possibility of cost-push or demand-pull inflation when making business decisions. In conclusion, understanding inflation is not just about recognizing its effects. It's about leveraging this knowledge to make smart business decisions and navigate the complexities of the market. By applying the insights from this episode, you can gain a competitive edge in your industry and achieve long-term success. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.